everyone, GM, how we all doing? It's exciting to be here. And it's exciting to be here simply because I'm also an alumni, cohort 9. I'm going to just walk us through something very important and also something very interesting. A lot of people always ask questions. Like I have a lot of people ask questions about this. A lot of people have reached out to me, and quite beautifully, I feel like this is the perfect conversation to take up. My work here is to give us an awareness. The simple question that I know that is on everybody's minds is around these tax laws are coming. There seems to be a lot of energy around these tax laws. What do we need to do? So it's a practical guide to this new rules that are going to take effect from January next year. And as you can see, I think the last speaker before me, who I actually believe is a senior colleague in the bar, spoke a lot about where developers can come in to help FIRS and help tax authorities. And I think through my presentation, you get to understand why that can be, because as much as you seem to, for most of us that are here, we seem to understand the techniques of smart contracts and technology itself. Tax is a whole different new headache on its own. But the goal of this workshop is to combine both the law and practical application of it, make it as suitable as it can be for everybody that is joining us. So over this conversation, I'm going to be talking about how to identify which crypto transactions effectively trigger tax obligations, just walk you through the tax rates and understanding how the tax rates work, and also help you how to understand how do you register, how do you report, how do you file, and making sure that, okay, you're compliant with how you keep record, like how you keep your records, and also what would the penalties look like? And then how would you apply compliance strategies? So basically, that is just going to be the gist. So why is this happening? Effectively, I think the speaker before me spoke a lot about this. We have made a lot of noise about the fact that Nigeria is this, Nigeria is that, Nigeria is doing this, Nigeria is doing that. So basically, these are just some statistics that we throw in our face. Oh, according to chain analysis, we are ranked number 2 in global adoption. We are ranked number 1 in stable coins adoption globally. Between this time frame, there's been over 59 billion dollars that's passed through crypto transactions within Nigeria. So all of those numbers would make the government begin to tingle. Okay, this is money that exists outside of the system. This is money that is not taxed. This is money that we are not seeing coming back. And we need these monies so that we can increase the tax bracket. I think the target for the federal government is, with the coming of these new tax laws, they're going to increase the tax bracket to up to 18% of the citizens getting taxed. So you realize that, oh, a lot of Nigerians are not taxed at all. Like, we don't pay tax. The highest taxes that we pay mostly is VAT that we pay at the point of, but then there are even some shops that don't even know they are supposed to be collecting VAT and they don't collect VAT. So additionally also is that there's an actual need for regulatory clarity. And also, we are shifting from the ages of restrictions now to the age of regulation. I may interest you to know that in the whole of the continent of Africa, where you look at the countries that have made progress in terms of regulations that has to do with crypto, blockchain, and Web3 in general, Nigeria is number 1. Nigeria has the most advanced regulations, even though, yeah, there are some specific regulations that we still need. There are some specific gaps that we need to close. But when you compare us to the entire continent, we are still an industry leader. And the goal of all of this shift from restrictions to regulation is largely to balance innovation with investor protection. So how can we get investors to come in, and how can we ensure that if investors are investing, the laws are there? And then there's also the general need to align with international standards. So for the FAT standard, the Financial Action Task Force, and the IOSCO, that's like International Organization for Security Commission standard. So all of those things is why we have these laws. I'm just sort of like laying the background for why we have these laws. And effectively, this is the legal framework that currently exists. high-level legal framework. I didn't include things like the Cybercrimes Act. The Cybercrimes Act is also a relevant one because it was the first one that first defined what virtual asset service providers are. But effectively, these are the major ones that concern us in relation to today's conversation and even the general crypto regulations in Nigeria. The Finance Act, even though now that section has been repealed, but a key part is the percentage, that's the rate that it gives us. So it introduced the 10% of capital gains tax on digital asset disposals. And the Nigerian Tax Code, effectively of 2025, which includes the Nigerian Tax Act, the Nigerian Tax Administration Act, and the other two acts. But generally, it's a very, very comprehensive code. So it repealed all existing tax frameworks and introduced a brand new one that effectively takes effect from 2026. So the Tax Act, the Tax Administration Act, the Investment and Securities Act is also important. And I think the speaker before me spoke about the need for regulatory clarity on token classification. For now, Nigeria has not fully defined it yet. To the extent of our existing laws, that's not fully defined it yet. What I mean by it has not fully defined it is simply every single type of digital or virtual asset is classified as a security. For those of us who are developers who build, you know that it's not everything that is good that should be considered a security. Even though, yes, the Nigerian Tax Administration Act is also contemplating the Howey test to determine what securities are, particularly in the fifth schedule, but that has not gotten mainstream yet. In terms of mainstream, the closest that we have is that every single thing that you can think of as a digital or virtual asset is considered a security. And then also we also have SEC rules for digital assets. So it defines what virtual asset service providers are. There are different classes. Are they digital asset exchanges? Are they digital asset custodians? Are they operating platforms? Are they interfaces? So these are all the different classes of VAPs that we get to have. And that law also provides for like the registration, the rules provide for registration requirements, the capital thresholds, and operational obligations of all of these VAPs. And lastly is the CBN guidelines that came out in December 2023 for persons, for VAPs to be able that permit banks to be able to operate VAPs accounts. So that's basically the pillars of the Nigerian crypto laws. So let's just go into some basic definitions. So what exactly is Nigeria taxing? So the first one that you can think of is digital assets and virtual assets. What's crazy enough is the law as it stands is, I'll be doing a lot of critique of the law. It's a bit, I want to say not necessarily confused, but then you read some of these laws that I just finished explaining, and they just talk about only digital assets. And you read some of these laws just talk about only virtual assets, and then you read some that tells you digital or virtual assets. But then the thing is, it's not more about the English or the nomenclature within the law, but it is the spirit behind it when it comes down to interpreting laws. So exactly, Nigeria is going to be taxing your digital assets, so your crypto assets, utility tokens, security tokens, NFT derivatives, all of those are going to be taxed. Nigeria is also going to be taxing virtual asset service providers, which are VAS. So that is also an important thing for you to know that will happen. And then also, as explained, all digital assets are classified as securities under the ISA. So in Nigeria, you can't come and argue that, oh, this is not a security, this is a utility, or this is a commodity token, or this is just probably a gaming token or a gaming identity. Every single thing that you do that has to do with the blockchain is classified as a security. And then also, when does your tax liability arise under this new tax code? So these are just general. We'll go into more specifics because the way I planned this is that we go into more specifics for individuals and then for companies themselves. The reason why we are doing for individuals is most of us on this call are individuals that are going to be subject to this new tax code that is going to go live in January next year. And then many of us here are also building companies that would also fall under that bracket. So generally, what the government is looking to tax is the sale or exchange of your crypto, mining or staking rewards, airdrops or bounties that you receive, payments for goods and services using crypto. So you see a lot of I've seen one or two startups around here that are giving you cards that you can use directly to pay with USDT, that you can pay using USDT or USDC, all of those. And then also transfer of virtual assets. So depending on the circumstances. But basically, all of these tax liabilities would raise what is known as chargeable income. So the chargeable income is sort of like the gain that that the government is going to make off you paying your tax. And it's basically income versus minus allowed expenses. But let me just go a little bit or simply technical to give us now for individuals. So you as an individual taxpayer, what are the things that you need to take note of? So individual taxable transactions under this new tax code. So let's say, for example, you off-ramp, you sell your crypto for Naira. Basically, what the law is going to look at is, okay, how much did you sell the crypto, and or how much is the selling price versus how much is the acquisition cost. So how much did you get the crypto as at the time that you got the crypto? So let's say, for example, if you got one ETH today, how much did you get that one Ether versus how much did you sell it? So when you sell that, the calculation is that it's going to be calculated generally under capital gains tax. If you just bought and hold, there's no tax until the time that you dispose of it. So disposal is what we call selling. Until the time that you dispose of it, you sell it. So if you sell crypto for Naira, 10% capital gains tax from Finance Act 2023. If you do even a crypto swap, let's say you shift from ETH to Solana, you move from Ethereum to Solana, effectively that also applies. At that point, what is the market value of the crypto that you are receiving versus what is the basis that it is giving? So if you are recording a loss, take for example, you are recording a crypto loss, one thing that you need to put at the back of your mind that you can only make that deduction from a crypto transaction. So maybe you have a day job and you also have crypto as a side hustle. You cannot make losses we'll come to deductions much later. But basically, if you're swapping from one cryptocurrency to another cryptocurrency, you are supposed to take a record of that and then know that, okay, it is taxable generally. Right now, all of the things I'm speaking is generally. Specific use cases, like every case may be unique in its own application of the law, but then generally this is what will generally apply. So it's taxable. So if you're doing crypto swaps, so for every single, maybe you just even think, oh, I just need to move from USDC to USDT. As simple as that may be, even though, yeah, they're all stable coins, but the law envisages a moment where those are direct crypto swaps that may be taxable under capital gains tax. And you are looking at generally 10% of the gain that is coming from that. Then also, if you're paying with crypto, as we said, what's the market value? That's what's the Naira value of the goods or services that you're receiving, and then what's the cost basis in terms of the crypto cent. And in terms of the application within Nigeria, I know that for all of us who exist, most of us, we think in terms of dollar terms. That's something that we always joke about when we're in Web3 Bridge. We say we don't call money in Naira. But effectively, if you're going to be dealing with Nigerian tax code and the Nigerian tax law, you have to, every single thing will be converted down to the Naira basis for it. And the Naira basis that it will be converted to is using generally exchanges that are already accredited with the Securities and Exchange Commission, the SEC. Those are the rates that usually would apply in this circumstance. And then also, if you are receiving crypto as a salary or you are receiving it as payments, for example, that would also be something that would fall under tax consideration. So what is the value of what you are receiving? So what you are receiving would be subject to personal income tax, PIT. We're going to look at the rates in the next slide. So also, if you're involved in staking, that means if you're staking your crypto for on protocols or you're mining, all of those things are also going to also be taxed. Also, airdrops and bounties. So the federal government is looking at all of these things. Yeah, Favor, your hand is up. Okay, I don't know. Can you just shoot the question? Even though there are other questions later, but just shoot the question. Okay. Oh, maybe that was okay. It's a mistake. Oh, okay. Then let me just move on. So basically, these are the broad cases where your individual crypto use can get taxed. So, but if you think about all of these things and you sum it, that basically means that almost every transaction that you do is has likely tax implications. So even if it is NFTs that you are dealing with, even if you are just disposing of any digital or virtual asset, it can be considered as that is a crypto asset that is being sold either for Naira or for dollars, or you're swapping between one crypto asset to another crypto asset. But generally, these are the things that concern you as an individual. So let's just take, for this individual tax rates, this is the tax rates that we're going to deal with. Now I see your question, I'm going to respond to it towards the end. I know it's a question, like from seeing the question, I get it a lot. So these are the individual tax rates that apply to us as individuals. So for the first 800,000, you are taxed at 0%. And then for the next 2.2 million, you are taxed at 15%. So 801,000 to 2.2 million is taxed at 15%. One of the most interesting things is if you remember the last presentation, the last speaker that spoke before me, he said that we need people that can build protocols that work for tax. And we are going to do a small experiment with that, just here with looking at these individual tax rates. So then for the next 9 million, is going to be taxed at 18%, 21%, 23%. And then the highest that you can find in Nigeria, regardless of the level of income that you will have, the tax rate is 25%. So that is still comparatively lower to some other countries that you see around the world. For example, I know that the UK has this is called a progressive tax rate, and the progressive tax rate in the UK goes up to as high as, in some instances, up to 45%. So, but in Nigeria, the highest that our individual tax rates apply is 25%. And then this tax rate is annual cumulative income, so not monthly. So it's not that, if I'm earning 800,000 Naira monthly, then there's 0% tax. No, 800,000 Naira over an entire year. I think I was part of a conversation where someone was like, everybody, like a lot of people celebrate 800,000 but don't realize the implication. You could just pull up your calculator and do 800,000 divided by 12. Then you realize, the moment I'm earning above this money, there is a particular tax that I must pay. So if you're earning anything total cumulative over the 12-year period above 800,000, so even if you're earning 801,000, that's just barely, I think if you do the calculation, it's still below our minimum wage. It's a very, very interesting law. Why I say it's an interesting law is because when I look at these tax rates, I look at some of the exemptions under the tax, under this law, you'd get to realize that, some of these exemptions, the way they get to work does not even correlate with some of the other provisions of the law. But that's also another headache that we'll come to look at much later. So I'm just going to give us a simple assignment. If you finish this calculation, you can just put your response in the chat box, and we're going to look at that much later. So if you earn 15 million Naira yearly, how much would your tax be? Just think about it and look at this. So this is more like personal income tax, and you're earning 15 million Naira annually. So every year, what you're getting is 15 million. How much tax do you think the government would want you to pay? Don't worry, just do it. I call it a teaser to just so that you understand that there's a trap in there, and that's where we need automated systems that can come and help us do the calculation. And if you watch a lot of movies, you get to realize that dealing with tax can be quite taxing itself. So an individual example now. So an individual tax example, this is a retail trader. They're a trader that exists within this ecosystem. And so let's just take, for example, let's say your name is Chinedu and you bought Bitcoin worth 2 million Naira in March this year. And then 8 months later, which is like November next month, you decide that you want to sell it, and then you end up selling it for like 7 million Naira. That's the facts of the case now. So we're looking at this as an individual example. I just want to put you so that you can begin to think in that mind. And so basically, your chargeable gain, what the law is looking at, John Ode pay two, we'll come to that. So basically, your computation is the proceeds that you get. You bought it at 2 million, you sold it at 7 million. The proceeds that you get is 7 7 million minus 2 million, that means your gain is 5 million. So on this gain, capital gains tax, because you sold it at 7 million and you made a gain of 5 million, you owe the government 10% of this 5 million, which is your capital gains. That's broadly speaking. Okay, so what you're expected to do is that you go to your state internal revenue service and then you file a capital gains return. And when you're filing that capital gains return, what you go with to the state internal revenue service is the proof of purchase. So you come with a receipt of, okay, this is how much I bought this. I bought Bitcoin and I bought it at 2 million naira. This is how much I sold it at. This is the gain that I made in between. So these are the dates. This is the amount. And so that when they assess you, they tell you, oh, okay, it's 10%, 500,000 is what you owe, and you pay your 500,000. Example number 2 is, let's say Messi is a freelance developer and she receives payments 0.58. The worth might be definitely more than this, but just as an example, it's worth 1.2 million for a freelance work. Now, at the time of the receipt of the money, it was worth 1.2 million naira. This 1.2 million naira is taxable income subject to personal income tax. So personal income tax are the rates that we showed previously, where you looked at, it progressed from 800,000 up to 50 million naira. Those are personal income tax rates. Now, and like we said, it can go up to 25% depending on the total income on the total income level. But now, if Mercy that received this payment of 0.58, which is worth 1.2 million naira at the time that she received it, that means with a tax obligation of 300,000 naira at that rate, if she later sells it at 1.5 million naira, that means she held onto the 0.58 and then later decided that she was going to sell it. And then she sold it for 1.5 million. That means it's appreciated. So she gained an additional 300,000 gain on it, which is subject to it. This additional 300,000 that she gained is subject to capital gains tax, because what is going to be calculated is, okay, look at this and say, hey, 300,000, 1.5 million minus 1.2 million, 300,000, 10% is your capital gains tax, 30,000. So when you go to the tax office at the end of the reporting year, and then you say, oh, okay, the total income that I made this year is 0.5. At the time, it was 1.2 million naira. And then when I eventually sold it, I sold it for 1.5 million. So I made a total, it's going to be calculated, is this 10% of the capital gains plus whatever applicable tax rates at the personal income tax rate. So that will now be combined, and that will be the amount of tax that the person would already pay. So our brain teaser, we said, if you earn 15 million naira, how much would your tax be? So if you're looking at that, I think we had a response in the chat, and he said the tax is 2,580. Well, someone might say, okay, why is that? We looked at the several tax rates just a while ago, and I'm looking at 15 million. 15 million is within this bracket, it's within this tier, it's under tier 4. So under tier 4 of the next 30 million up to 25 million is charged at 21%. But basically, that is not how tax calculation works. So let me just walk a scenario example of how tax calculation works. I remember when I was in the university and we were taking this course. This was like this was a very confusing type of mathematics. But let's try our best. Let me try my best to sort of like just walk us through how you calculate your tax as it relates to these individual thresholds. I know you shared in the chat a simple calculator, but sometimes you might need to do the calculations on your own simply because you need to do some deductions on it. So this is how it works. So let's assume an individual has a chargeable income of 15 million naira per year. Here's how the tax will be calculated. For the first 800,000 in that 15 million, so we take out 800,000 from that 15 million, it's going to be charged 0%. So it's going to be charged 0 naira. So the next tier now, because he still has a balance that is left, we move to the next tier. So whoever that calculator, the platform that you went to that did that calculator, this is the algorithm that is working behind it. So for the next 2.2 million up to 9 million is charged at 15%. So they remove out of the remaining balance of this chargeable income, they remove out of the remaining balance and say, okay, 15% of that balance that is left is 330,000 naira. That is the 15% out of that fraction. What is now left also moves to the next tier. And in this next tier is charged at 18%. And this 18% now is drawn up to the 1.6 million. I'm just giving a very, very basic explanation, but these are some things that we can easily do and impute into smart contracts. So the remaining portion falls under tier 4. That is 30 million up to 25 million. So this income is up to tier 3. So if you do 800,000 plus 2.2 plus 9 million gives you 12 million, and the chargeable income is 15 million. So that means the person still has a balance of 3 million that is going to be taxed at 21%. And then this 3 million at 21% is going to give you 630,000. So tier 5 and tier 6 does not apply because there's nothing left for it to be charged at that tier. So the total tax payable by that person is not going to be 21% of this chargeable income of 15 million, but it's going to be, okay, at each of these rates, cumulative to it. So 0 from tier 1, 330,000 from tier 2, 1.6 from tier 3, and then 630 from tier 4. So cumulatively, if you have a chargeable income of 15 million, your tax liability is 2.580. So basically, this is how we calculate tax. So here you can think of it in terms of, if you're trying to be prudent in your head, you can say, okay, I know that if I just think about it as 21%, 21% is definitely more than this 2.5. So if I can just read out 21% of my income, I can pay my taxes and I'll still have small change that comes from my taxes. Yes, that you can do. And that is something that I strongly advise and recommend. Think about it that way, so that when you go to pay your tax, you always come back with change in your pocket and you're not left with extra penalties for you to pay. So deductions, exemptions, and penalties. So this is now for individuals. So for individuals, you are basically allowed to deduct from your taxable income, not from the tax rate, from your taxable income. If, for example, you consider platform transaction fees, you're allowed to deduct it. So if it comes down to, okay, this is the final money that you get, how much did you pay for transaction fees? You can deduct it. If you paid somebody, let's say you paid me as your lawyer now, I say, oh, let me do some legal work for you that relates to this particular income, you can deduct that also from your taxable income. And then also, what other costs? So let's say, for example, if you're mining, what's the cost of you getting electricity? What's the cost of you getting internet? So all of the costs that are directly related to that crypto income, you can deduct. But you cannot deduct from another income source. So let's say, for example, if you're also a doctor that works in a hospital, and then you also have crypto income, you cannot make deductions based on expenses that are related to your hospital salary, just as an example. Another exception, which is also very interesting, is if you have personal charter, also cash, that wouldn't really be factored in that. After you pay the tax on personal, that is less than 5 million naira, you're allowed. So sort of like the law allows you to hold a personal cash of like 5 million naira max. And then also gifts. If someone gives you a gift, you get airdrop. Airdrops are gifts, or you win bounties. Bounties are gifts. Generally, those bounties and those airdrops do not incur tax liability upon earning them. So let's say, for example, a new protocol comes in and then they do an airdrop. And after the airdrop, you get a certain percentage, you get some money from that airdrop. You are not going to pay immediately on that particular airdrop until the moment that you dispose of it. So when we talk about disposal event, it's until the moment you swap it for another crypto, or until the moment you sell it for naira, or until the moment you use it to pay for a service. Those are the times where you would now have to keep track of that conversation or keep track of that transaction, and then make your deductions off it. Also, the law also allows you to make, this is an exception, so it's a special exception, principal residence exemption. Now, this can be quite complicated, but then it's a once in a lifetime deduction that you can make on your income. Now, this principal residence exemption applies to if you get a new house. The law allows you to within a tax year to make deductions for the cost that it took you to set up your house. So if you're setting up a house, that as your principal place of residence, you can make deductions to reduce your tax income because you are contributing to housing. So that's like the rationale behind it. But basically, the law only allows you to do that once in your entire lifetime. So it's not that, you say, okay, I'm building 10 houses. For each of those 10 houses that happen in 10 different years, I'm going to be making deductions. No, you're not going to. Just once for one property and then once in your lifetime. That's what the law understands. Then now, the penalties. So if you fail to file your tax returns, now, let me just put it this way. It is everybody's personal responsibility to pay tax. So it is not, the government does not need to send you a reminder or send you an email or threaten you or send loan sharks to be calling you or post your picture on Facebook. The government does not need to do that for you to pay your tax. You are expected as a citizen to at the end of every assessment period, at the end of every financial year, Nigeria's assessment period is January to December. I'll discuss more of that in towards the end. At the end of every assessment period, you are expected to go by yourself and file your tax returns so that you get your own tax clearance certificate. As an individual, expected to do that. So you should do it for you to remain compliant in front of the law. Simply put that way. If you don't do that, there are penalties. So the failure for you to go and file your tax is you pay 50K as a general fee plus 25K for every month of default. So if you've not been paying for 3 years, they calculate, okay, 3 years is 36 months. 36 months, 36 times 25K. So for every single month that you refuse to pay, there's a 25K penalty on it. And then for the tax rates that you are supposed to pay that you didn't pay, there's going to also be a 10% interest that the government is going to charge on the fact that if you had paid us, what the government is saying is if you had paid us at the time that you had paid us, we would have made 10% of the money that you paid us. But since you didn't pay us, now you have to pay the 10% interest rate on it. And also, if you go to file your tax returns and you file false information, the fine for filing false information is 10 million naira. So you're expected to take note of all of your income, your expenses, and then keep all of those transaction records. But then when you now file information and you file wrong information, the fine is 10 million naira. And also, it is also a criminal offense for you to make wrong reports or for you not to also file. It can attract criminal liability. And attracting criminal liability, you could get up to 3 years in jail. So if you don't pay tax, there are instances where after collecting the fines, you still do jail. So, but just remember that every deduction that you're doing lowers your taxable income and does not affect your tax rate. So that basically is it for individual tax liabilities. Now I'm going to talk for companies because many of us are going to sort of like have companies. But before we do, I think let me see if I've answered the question in the chat box at here. It's a good place to pause and then look at 1 or 2 questions before we continue. So my wife is asking, how do the tax regulators track all this crypto income if crypto wallets are not connected to banking and payment systems? Good. I'm going to come to, it's definitely part of my presentation. I'm going to answer your question on that. Okay. The tax is calculated based on annual income, but it's paid or filed monthly. No, it's filed yearly, your personal tax, except if you work, you're expected to keep records of it, and then you pay at the end of the year. You can also choose to go monthly, but if you work for a company, the company is also supposed to receive monthly from you and then put it together and then pay on behalf of everybody. There are a lot of things around that. Then also, if you file monthly, you can have the option of filing monthly instead of you drawing up a yearly bill. But it all depends on you. Good. This is a very good question. What if there is no gain in case there is a loss? If there is a loss, the law allows you to make deductions. So let's take, for example, you have Bitcoin, you have Ethereum, you have Solana. All of those are tokens that you have. And then you made losses on maybe, let's say, okay, Bitcoin crashed, Ethereum crashed, and then you made losses on those two transactions. You are allowed to make deductions if you made a gain from Solana, for example. So if you made a gain from Solana, since it's still within the same crypto space, you are allowed to make deductions up until, so losses are deductions that you can remove. So if you made losses, you can deduct them from any other gain that you did. If you don't make any gain within a financial year, and you have records to prove that, okay, throughout this financial year, I was in red. I never made any profits. I never made any gains this financial year. I only racked up losses. The law allows on special considerations where you can carry over losses for a certain period of years. You can carry over losses into another new year for a certain period of years. That's something that is also allowed. Okay, so what about crypto transactions and personal income that happened before January 2026? So something that you need to know is that right now, this is the financial year for 2026. So basically, it applies to the extent of like the law is gets into effect in 2026. It will start working from 2026. Laws generally do not apply retroactively, they apply progressively. Okay, so if the assessments that will be done in 2026 is for the financial year of 2025, and that is when the new law would come into place. So for every single assessment that happens within this financial year can be carried over. I may be wrong on this, but to the best of my knowledge, this is how it's going to apply. So your income for this year will be carried over into as at the time that the law gets applied. Then now, for companies, so for all of us who have startups, who have companies that are registered within Nigeria, this is tax implications for companies, general overview. So generally, companies, either you're an exchange, you are a custodian, you are an operating platform, even if you own a mining rig, all of them are considered as VAPs. So you're a virtual asset service provider. And as a virtual asset service provider, you're subject to what is known as company income tax, CIT, on all of your profits. Okay, and the standard rate for CIT is not progressive the same way that we have for personal income. It's standard at 30%, unless you're a small company. So, well, the moment you hit the minimum requirements for you to be able to pay tax as a company, 30% of your profit is your tax. So we'll definitely come to practical examples on that in subsequent slides. Then number two, capital gains tax is also applied if you as a company. So let's say, for example, now Web3 Bridge as a company owns some ETH or Bitcoin. The day that Web3 Bridge decides to dispose of those assets, you are going to definitely pay capital gains tax on it as a company. So it also applies. Then the standard rate, I said, is 30%. And then small companies. Now, the law classifies people who have a yearly turnover that is less than 50 million to be small companies. So if your turnover for that particular year is less than 50 million, you pay zero company income tax. But if your turnover is more than 50 million, then the standard 30% apply. But then additional to the application of the 30% is also an additional levy known as 44% development levy that every company in Nigeria pays. So what this money, the law expressly states that it's used for three reasons: for education, to develop our education. Part of it is what goes to like TET fund that you see in Nigerian tertiary institutions, and then also technology development. So for the country to be able to have money to fund technology R&D, and then also security development. Those are the reasons why we pay this additional levy. So outside of the 30%, so for every company, basically, when you're paying 30%, effectively you're paying 30 plus 4, so that's 4% as your standard company income tax. That's what you are paying every year, except you are a small company. Then now, for compliance purposes, so you need to just know every person that operates as a VAPS, or even if you don't operate as a VAPS, but then you're operating within Nigeria, and then you do anything that touches on what the law defines as responsibilities for VAPS, you must register or incorporate your company with the CAC, you must register with the FIRS, you must also register with EFCC, and you must also obtain your licenses and your certificates also from the Securities and Exchange Commission, the SEC. So this just takes us into a straight example of a company. So let's say, for example, you're a DAX, you're a digital asset exchange platform, and then this crypto exchange platform, let's say maybe let's call it Block Trade Limited, for example. You're a Nigerian crypto exchange, and then you earn 100 million naira in trading last year. So after deducting 60 million, which is like your operating cost and expenses for doing your business, you're left with an accessible profit of 40 million. Now, the company income tax that applies, which is 30%, is 12 million naira. So from the accessible profit, this is before you begin to share dividends to your shareholders and everybody. Because dividends is not part of your expenses. You cannot deduct dividends before paying tax. You deduct dividends from what is left after you've paid your tax. So the accessible profit is 40 million. You remove 12 million that belongs to the government. You also remove an additional 4%, which is 1.6 million that also belongs to the government. So your total tax as a company that made a revenue of 100 million within a financial year is like 13.6 million. This is general rough estimates. I'm just giving that as an example, so that we just have an idea of how this thing works. Like I said, every particular situation, every case, every individual, every tax limit that you have, there are some peculiarities for every person on an individual basis. A second example is if you're a startup that has mixed crypto and fiat income. So let's say you're doing a business that, okay, people pay you in crypto and people also pay you in fiat. And then what you are doing, you're providing, in this particular situation, let's say you're providing blockchain consulting. So you're a consulting firm. And then you earn 30 million naira and then 20 million also as advisory fees. You also realized a 5 million naira gain from you holding Ethereum. So your total accessible profit is 55 million. Then now you look at, okay, how much expenses did I make? How much capital allowances? So capital improvements that I made within my office, how much capital allowances am I allowed to the extent of the profits that I made? So we say 35 million, 2 million, this is just an assumption. You deduct that from this, and then you have what is left as a total taxable profit of 18 million. So when you do the calculation of the company income tax plus the levy, that's 30 plus 4. Well, the tax that you are going to pay to the government is about 6 million out of the 18 million profits that you made. So for you as a company, now, for the person that asks, how do the government know this? One of the obligations that all VAPs, now what I'm going to say now is going to be very crazy, is that as far as you are registered in Nigeria as a virtual asset service provider, you are expected to maintain all of these records. So for every single person that is operating in Nigeria as a virtual asset service provider, you're expected to maintain transaction logs. So the dates, the types, the value, the counterparties, the fair market value as at the time for every single transaction, and the fees that you collect. That's one first record that you must keep and maintain. The second record that you must keep and maintain is you must maintain public addresses and then custodial and non-custodial wallet addresses that you have, and also what are balances. So if you are a platform that the wallets are not custodial, but you must keep all the public addresses of the wallets that are in your place and the balances of those wallets that deal with your platform. Then also, for you as a company that is a VAS, you must do robust KYC. Now, previously, we used to advise people to do KYC simply for AML and CTF compliance. So anti-money laundering and counter-terrorism financing compliance. That's what we usually advise people to do. But with the coming of this new tax code, the Nigerian Tax Act and the Nigerian Tax Administration Act, you are now doing KYC for the purpose of tax also. You are not doing KYC strictly for AML and CTF compliance. You are doing KYC for all your customers. You must do KYC for all of your customers. And the law is explicit in the type of information that you must collect from your customers. So you must collect their personal details. You must collect their basic information. Now, when this gets in place, all of this, you are supposed to keep those records for at least 7 years. 7 years preceding that date. So if the law is taking effect from next year, you start keeping records for at least 7 years. If we look at, for example, like Nigerian Data Protection Act, the NDPA, the NDPA also gives us the right to, if you for most of the products that are building, when you see, okay, under terms of service, sometimes you see terms of use, and then you see privacy policy. In privacy policy, you will see where companies will tell you that you have a right to data erasure but then your right to data erasure is only within the allowed limits of the law. So usually for most circumstances, the right to data erasure happens for you to keep records, in some cases for 3 years, in some cases for 5 years, in some cases for 7, in some cases for 12, depending on the industry that you are working in. For the crypto industry, what the law says is that you have to keep all user records, particularly their KYC records, for 7 years. So even if someone even if out of your own personal right to data erasure, you write to the company, you tell the company, hey, I want you to delete the data that you have about me from your platform. The company by law is mandated to keep it for 7 years before it is finally deleted. So you also keep financial records, so audited statements, asset registers, capital allowances, and then you also keep your compliance records, so your tax returns, your SEC certificates, your SCOMO certificates, your CAC clearances. You keep all of those things. Now, to answer the question of how the government can be able to track all of these things, that's one of the main reasons why you see a lot of crypto platforms are leaving Nigeria, is because part of the Nigerian law that says, okay, for you to be able to apply, for you to be able to work in Nigeria, you need to keep these records. And then you also not just need to keep the records, you also need to submit those records to the government. So for you as a company that is collecting KYC information from your customers, you are expected to submit those KYC records to the government. And I think I was talking about this when this thing first came out. I was talking about it on Twitter, and I'll say the one way that the government is going to be able to track all of us that deal with crypto is through all of the startups that we are building. Because yes, the government knows that if we are independent and there's no system, they might not be able to find you, they might not know your wallet address and trace you. But simply because all these platforms that you are dealing with that are mandated to keep KYC records for them to have licenses to operate within Nigeria, keep your records, the government can be able to do a tracing between this is this wallet address from this platform, this platform, this platform. This wallet address belongs to this person. This is the transaction history of this person across all of these platforms. So they can be able to do independent assessment. It's a whole chunk of data that they are collecting. And to the best of my knowledge, I don't know if the government is building any systems that will help them to be able to do analysis of this data to be able to provide. But then, if there's anything I don't put past the Nigerian government is when you owe the government money, the Nigerian government knows how to follow you to collect their money. So that is one of the main reasons why this law exists. And when you look at companies that are saying, oh, we cannot do this, the company will send you a notice and tell you we are discontinuing our service in Nigeria. We cannot operate in Nigeria because of A, B, C, D, E. Now, it is good to operate in Nigeria, but then these are all the downsides that you need to consider. And then we begin to explore things like, okay, if CK comes in, because all of this information that are collecting about people, really, it is so much information and so much personal information that we really don't need to have at the hands of companies that will now be transmitted to government. But then that's a whole lot other conversation where we talk about blockchain and privacy that everybody is complaining about globally. But basically, if you want to register your company as a virtual asset service provider for it to be able to get a license to operate either as an exchange or as a custodian or as an operating platform or as an interface. So basically, anything that you're building that has to do with crypto, you're expected to get a VALF license from the SEC. And for you to be able to do that, these are all of this like a simple rundown of the steps that are involved. It's a very complex process, but then as simply as put, this is it. So the first step is to incorporate your company with the CAC. So you include crypto business in your objectives. Now, this one disconnects. I'm going to speak now from practical experience. This one disconnects between all of these different agencies that we have in Nigeria and the fact that these agencies, though they exist in Nigeria, I know that we're streaming this platform, we're streaming this conversation and it's going to be available publicly. I'm going to say this because it's a pain point, but then as much as a pain point, it's also something that people are that we're missing out a lot on. If you attempt to incorporate a company in Nigeria right now, I say it authoritatively, and you include that you're doing anything crypto or blockchain related in your business objectives, CAC is going to reject that application. And that is one thing that has been helping people, except you go specially to CAC. But if you're doing the general route where every other person registers companies, CAC used to query those applications and send it back. They tell you cannot incorporate companies with this as part of their objectives. But then the law has come in to say, okay, you are supposed to include crypto business in your objectives. The reason why you need to do that, so in most circumstances where we have to do that for people who really need a VAPS license, you have to actually approach the CAC directly and submit a formal application for registration, not through the normal route. So extremely complex. It's supposed to be easy, but it's extremely complex. Then from your incorporation with the CAC, you register with the Federal Inland Revenue Service. Even though right now it has changed from Federal Inland Revenue Service to the Nigerian Revenue Service, take effect from January next year. So it's no more FIRS, it's now NRS, Nigerian Revenue Service. So you register with them, you get a tax identification number, a TIN number, and then with your TIN number, usually, okay, sorry, I made a mistake. Step 6 is supposed to come before step 3. You obtain your SCUMU certificate. This certificate is going to be, we get it from the EFCC. So you obtain your SCUMU certificate. That shows that you're AML and CFT compliant. Then you now approach the SEC through the RIP portal for an initial assessment of your company and these documents that you already have gotten from all of these different government agencies. And when you approach the platform and you make your submissions, you obtain an approval in principle, which is valid for 12 months. In that 12 months is usually where they do a sandbox of your business before you transition into full registration. So they sort of like they give you approval in principle, you can operate. We're looking at your business, and after 12 months, we'll decide if we want to give you a full license, or if you do not meet, for us to give you a full license. So that's basically it for the steps. Now, in terms of like filing deadlines and procedures, when and how to file your returns, for companies, you're supposed to file returns within 6 months of the accounting year. And then for individuals, even if you pay your tax monthly, you still definitely need to go and file an annual returns. So if you pay your tax monthly, you're not going to get a yearly tax clearance certificate. That's only given annually. So you keep getting the receipts of payment of your tax up until the end of the year. And then when you now come and you submit all of those individual receipts of your returns, you get your tax clearance certificate. And usually for individuals the accounting year is January to December, but then you have a filing period between January to March 31st of the following year. Then for VAPs, you are expected for VAPs to file with the SEC monthly returns or there are monthly reports that you file within your 12 months assessment period or even afterwards. And then also because of your CFT and anti-money laundering compliance, you're expected to make reports on any large transaction that happened within your platform. So it may be a large transaction or a suspicious transaction. If it is for suspicious transactions, you're supposed to file within 48 hours. But if it's for large transactions, you can leave it to file at the end of every month. And then for you, when you're going to file, you need your audited statements, you need your tax computation, you need the evidence of payment of your tax, and then you need attestation by the principal officer. So that's usually for companies now. For individuals also, you just need mostly your statements. So your statement of income and your statement of expenses and how you are calculating it. If you go to all of these states in internal revenue services, they are going to help you do assessments. I just realized that I didn't cover residencies in this particular slide. That's another whole conversation to determine where exactly you should pay your tax. If you are a nomad, you move a lot. The law requires that if you stay in one particular place for up to 100, I think it's around 63 days, that is the place that you should pay your tax for that particular year. There are consequences of late filing. So also for companies as well as for individuals, there are penalties, as we've discussed for the individuals. There are interest. They can be diverse for companies depending on your revenue and your annual turnover. And then also there are potential criminal prosecutions. So basically for you as an individual and even as a startup business, I'm rounding up now, these are common mistakes that you should avoid. Number one, you should avoid ignoring crypto-to-crypto exchanges as taxable events. I know that's one of the easiest things that many people would forget that they are supposed to take note of and take record of. So if you swap ETH for USDT before you bring it to Naira, you're supposed to take note of there's a tax event there's a special tax event that was created at the time that you swap from ETH to USDC. And there's also another tax event that was created at the time that you swap from USDC or USDT to Naira. So there are two separate tax events. It may be in the sequence of one money that you're trying to move across so that you finally have it in your account. But then you begin to realize these are all of the stress of moving money from from DeFi to traditional finance. It's one of the biggest challenges. Also, if you use incorrect valuation methods or unofficial rates, it's also a mistake that you should avoid. So when looking at official rates, you should look at rates from, I think Quidax has a license from the SEC. You should look at the rates that Quidax is offering as just as an example platform. Also, you should avoid mixing personal and business crypto transactions. So if you're an individual, you have a company, you have a startup, please avoid mixing your own personal money with your business money, and also avoid mixing your business money with also your customers' money. If you do custodial services, so you're holding those money on behalf of those persons. Another mistake you should avoid to do is inadequate record keeping. Okay, so your documentation is not up to date, it's not up to standard. You should avoid doing that also. Another thing you should also avoid doing is you should avoid the mistake of not reporting staking, airdrops, or mining income. I know you look at most of the time we look at those things as bonus or passive incomes, and then please avoid the mistake of you not. Basically, you're expected to go and report. If you don't report, that is when they can decide to come for you. Or then now you now miss your filing deadlines. You realize that okay, you might be mandated to pay interest, pay fines on you missing the deadlines. And then also for businesses, also avoid operating without an SEC license. So basically, as we said, what happens if you don't comply? For businesses, tax audits happen currently by the FIRS. But then from next year is going to be the NRS. And then also financial penalties, 10% of tax plus interest and administrative fines that can go as high as 10 million naira. I said that also. And then finally, also criminal prosecution of up to 3 years imprisonment with up to 20 million fine. This is usually mostly in terms of company situations. And then also, you can have SEC enforcement where they suspend or revoke your license and ban your business. So you're operating, you have a successful business. Every day you're on Twitter announcing, oh, our business made a traction, or we just processed $10 million in transactions. The SEC is watching, particularly they are just waiting for you. When it comes for the tax master to knock on your door, I'm very sure that from next year we are going to see a lot of interesting situations that are going to happen. And then also, because you don't have that special SEC license that allows you to be able to open bank account based on the CBN guidelines of December 2023, you can have where your assets get seized. So your bank accounts can get frozen, your BVN can get frozen across platforms. You can also have where people are existing as VAPs, and then where the platform is also a custodial platform, the authorities can come with a court order for you to freeze users' funds in their wallets. Those are extreme circumstances, but then they can happen. Also, you can also gain reputation loss by the government putting you in newspapers or announcing you on social media as somebody that is not paying his tax, as a company or as an individual that is not paying the tax. Mostly companies get to suffer, but individuals, you might not. So thank you so much for listening to me. Thank you so much for giving me this opportunity.